in the first week of December, between 8th and 12th of December, I plan to be in Muscat in the Sultanate of Oman. Those who would like to see me in Oman can get in touch with my team. There's a WhatsApp number given below and there's an email ID also given below. So those desirous of getting in touch with me at the Sultanate of Oman, especially in the city of Muscat from 8th to 12th of December, can definitely contact me there. I hope to see you all in Oman soon. Thank you for watching. Be rich. Good evening and welcome back to Be Rich. Yesterday, whatever was expected happened. The whole world was watching with bated breath of what the US Federal Reserve would do. The US Federal Reserve did what it was expected to do. It met, it discussed the matter, it decided that inflation was far from conquered, the core inflation was continuing to grow, the commodity fall has had very little impact, the time taken it takes for monetary policy to work through the system is much more. It is going to take a long time for inflation to come to its targeted level of 2%. What J. Paul said made more sense. He said we have to be patient. You have to give monetary policy time to do its work. And he said two more important things. He said we expected a median rate of 4.6%. Last time we guided that, but rates are going to be much higher than that, which means I read it as a minimum of 5.5%, if not 6%. So it's very clear what is today between 3.75 to 4 will go to 5.5 to 6. That means the Federal Reserve will increase interest rates by at least 1.5% in the next 6 months. These rates have never been seen for a very long time. This current rate has not been seen since 2007. This is huge. This is the first time in 15 years these rates have been seen. More than 15 years ago, before the crisis, when rates were increased to cool down the market, that is when the last of these these levels of interest rates were seen. And even before that, in the aftermath of the dot-com crisis, interest rates came nearly to zero. So if they go up 1.5 times, we are now back in where it was in the 90s. Never before, since the days of Volcker, have interest rates risen so quickly. There have been 4 interest rate hikes of 0.75, which is 3%. There have been 2 more hikes before that, 0.5 and 0.25. So the Fed rates, which was between 0 and 0.25, are now between 3.75 and 4. The Fed is also tightening more quantitative. That is, what does that mean? When they were doing quantitative easing, they were buying bonds regularly in the open market. Today, what they are doing is when bonds mature, they were buying it back, they have stopped buying it back. They are allowing bonds to mature and go out of the system. So, this rate tightening is supposed to be at the rate of $1 trillion per year. Exactly how much the Fed has not yet told us. People have worked out and they say it is at a pace lower than what the Fed envisaged. So there are two things happening. The rates are going up and at the same time the Fed is tightening. This means there is going to be a double pressure on the financial system. Already commentators have started talking about financial stability. That is, whether some important institutions can go bust. One of the 3 Nobel laureates who worked on these banking issues and who was given the Nobel Prize this year visited India recently, and he said that banks have learned their lessons from 2008 and are well capitalized to survive this fall. Therefore, banks will not fall, but fintech companies, which have been mushroomed in recent years, are big and have become shadow banks, and they will be vulnerable. The Fed will continue to tighten rates. But what Jerome Powell said, and initially the market was euphoric was he said that in the future, from December, the Fed could consider smaller rate hikes. That is, instead of 0.75, the Fed could consider zero point 0.5 or 0.25. But he also qualified to say that is dependent on the data. As of today, the available of job openings, unemployment rate, all point to the fact that the American economy is working in full swing, which means that there is shortage of labor and there are enough job openings. People are not struggling to find jobs. In fact, small and medium business is struggling to find labor at competitive rates. This means wage inflation is also going up. All this indicates that further tightening is on. When, like the great Warren Buffett has taught us, the interest rates act like gravity on profits, and therefore one can expect all profits to come down. If not flat, there will be decline in large companies' profits across the world. Companies which have large debt will be under severe pressure. So, nothing fundamentally has changed. The case for the stock market is bad. Generally, the outlook looks bad, and 2023 does not offer us any great hope. It is very clear that there will be a recession. Whether the recession is shallow or deep, that only we will know when we go through it. But the recession is coming, and it is away at least 6 months away, according to me. Nobody can predict a recession. Sometimes we know a recession has come after we are in it. Therefore, nobody can say confirmed. Nobody can confirm that whether the recession is 6 months away or are we already in a beginning of a recession period. This is confirmed once the American government releases its statistical figures. But one thing is certain, that startups are finding it difficult to find money. They have not had positive cash flow. Lot of layoffs have taken place. In my country, in India, where I live, in the city of Bangalore and South India, where most of these startups are based, 25% of workers have lost their job. This is about 25,000 tech workers have lost their job in companies as diverse as service providers, Netflix, Tencent, and Indian service providers. So this means job losses in technology have been spread evenly across all categories of companies. There is growing pressure. India's one of India's largest unicorns, Baiju, has announced that it will lay off 12,000 people. Then they backtracked to say 2,500. Under political pressure in the state of Kerala, they said they will not shut down the unit in Thiruvananthapuram, which is the hometown of the founder. There is a lot of political pressure to on the startups not to retrench people. But things are going from bad to worse, and there is going to be a lot of cash flow pressures. Companies with large debt will also struggle to service debt. This hike will continue. Thank you for watching Be Rich. If you like this content, hit the like button for this video, subscribe to my channel, and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.